All attendees are in listen-only mode.
Good evening, everyone, and welcome to the June edition of Digging into the BI. This is where the folks from the DC chapter and the Maryland chapter get together and look at the latest issue of Better Investing magazine. We're glad to have you here. Here are the four stocks we're looking at. And I hear a little bit of noise in the background. So our panelists, if you're not speaking, make sure to mute your microphone so we can get that all done. And thank you. So here are the stocks we're going to be looking at. It's going to be UPS, Descartes Systems, Truist, and Nova. And so we have four great presenters for you. All of them have done this before, and a couple of them are new to this year. So thank you very much. This will be our 17th and 18th different person presenting at this just in 2023. So because of the support we've gotten from many of you, this has been a great success. So thank you very much. Let's go to our next slide, Cheryl. So we have our standard disclaimer, and it's, we're doing this for educational purposes, and we'll talk about stocks, obviously, four of them. But the thing is that we as Better Investing believe that you should conduct your own review and analysis of these stocks. We may own these stocks in our own personal portfolios or in our club portfolios, but if we're showing you anything there, we're not endorsing the website or the products that we're showing there, nor is Better Investing. We are recording this and it will go up on our YouTube channel, and I have a slide further up that will explain a little bit more about this. But as always, do your own research on these stocks. Next slide, please. So again, most of you I can see in the audience are Better Investing members, but we're doing this in large part to be able to reach to the people that are new to joining clubs or just heard about Better Investing through friends or on social media. And we want to be able to tell you a little bit about Better Investing. And so with these slides, we do have we focus on investment education as an organization, Better Investing does, and we really focus on long-term fundamental investing. And throughout this slide deck, and again, we'll have handouts so you can be able to do that, and we'll talk about the handouts in just a moment. But anytime you see a blue underline, that's a hyperlink. So if you have the PDF, you can click on that, and if you're connected to the internet, you will go directly to that location to understand more about it. Again, another way that we can sort of reach out to people because we're trying to show people the benefits of long-term fundamental investing. Let's go to our next slide. So here's the YouTube channel I told you about. It's really simple. It's Digging into BI is the YouTube channel. And you can just go into YouTube, type in Digging into BI, and you will find it. Or again, this blue underline is a hyperlink that will take you there. It's free. Again, you don't have to be a BI member, but we would ask you if you go there is to subscribe. That helps with the algorithm that Google has. Google owns YouTube. Also share those videos with people. That helps. And also like the individual ones. We're trying to get over 100 subscribers, and then we'll set a new goal. We're at 94. And the other thing is that all of these webinars that are up there, they're organized in the form of chapters, which means you can just advance to the stock you're looking at. And you can almost look at this as sort of being a video or a video version of First Cut for those people that are Better Investing members. Again, it's just seeing how other people do their own judgments. Let's go to our next slide. And again, here's how to navigate and go to a webinar. Again, most of you are regulars, so it shouldn't be that. But again, if you have any questions, we do have some people in the back room. Jonathan and Kent are there to help us out. Thank you. And you can type in any questions that you have there, and we'll get to questions at the end of all the presentations. You are automatically muted, but we can unmute people if you don't want to type something out. You can raise your hand with that hand icon. And where those green circles are on the control panel over on the right-hand side, you can sort of move that control panel. If it's in your way, you can move it around so it's easier to see. Let's go to our next slide. And again, this is if you need additional help. We still have had some trouble periodically ourselves. And again, most of you are regulars, so you shouldn't have any trouble with this. But this is a great sort of how-to for people if you're sharing it with it. If they have any questions with help, you can go to the help thing up on the top banner. Audio settings, if you're on your computer, it should be on computer audio, but you can listen to this on your phone call. I see a couple of you are coming that way. And again, that green arrow takes you over to the handouts, and we can put up 5 handouts in GoToWebinar. And so we have 4 completed SSGs as well as this entire slide deck in a PDF. And these are free. You can share them with people in your club, or again, people who you're trying to get interested in long-term investing, whether they're in your family or friends. Next slide. And so to be able to help with stuff, we have improved viewing to be able to help things with this. We do have one person controlling it. And Cheryl, I just realized, I don't think we turned on the closed captioning. We were practicing it last night on the presentation slide to do it. Maybe we won't have it tonight, but we'll try it in future ones. So maybe ignore that thing over in the lower left-hand side. But I saw it being done at Bank this Saturday, and I want to be able to try it with this. It's a great way for people that are hearing impaired to be able to do this. So it's kind of cool. Anyway, next slide. And so why are we doing this? Well, we want to show people how to use their, for BI members, we want to be able to show people how to use the BI magazine and the resources to get stock ideas. And if you're not a BI member, again, there's a free 90-day trial that you can give to anyone. And to take a look at this, that would be a great way to be able to do things. It's a great way for people that are beginners, or if you're uncertain of your judgment on a particular stock. Last time Rudy made a presentation, we gave him a doozy. We gave him Boeing, and that was really hard to do with not too many earnings. Rudy was like, what do I do? So it's a great way to be able to learn and work together. It's a way for our 2 chapters to work together, and the model clubs the 3 model clubs that we have, and also our Visit a Club program. So you don't have to be in a model club. We're here to help you as part of your club and be part of the Mid-Atlantic community. But again, if you're not in Maryland, DC, or Virginia, doesn't matter. We're welcome to have you. I see a couple of you from outside that area. Glad to have you. Next slide. So in just over an hour, we're going to look at 4 stocks. We're going to do the monthly stock to study, the monthly undervalued feature, and then 2 others that have come through either the BI website or the BI magazine, hence the term digging into the BI. They can come from First Cut and the online screen tools. I think these came from Screening and a First Cut were the other 2 ideas that came from. And sometimes it just takes someone else doing the same presentation you've heard someone else give before it finally clicks for you. So that's where we sort of come up with this. So let's go to our next slide, please. And again, for people that want to see in advance, you can see that this is available for BI members and non-BI members. If you go to the Home About Us news releases, these stocks that we're looking at tonight, the stock to study under UPS and Truist, the undervalued feature, they were announced back in April, so 2 months ago. In fact, they've just already announced last week the stocks for August, which are Booking and Skyworks. So you can see here in advance, and you can already do your own studies in advance of this just to sort of get yourself ahead of the game. Anyway, that's how you can find it. Let's go to our next slide. And again, make sure, a lot of you I know are regulars, but just as a reminder to be able to show to people that you may want to help out with, if you go to where Cheryl has the arrow with the red circle that says My Account, when you sign in, if you click on My Account, you'll come over and where the over on the left-hand side where you have the drop-down, you have the My Account and all that personal information, that email and product subscription information where the green circle is. If you click on that, what it will do is it'll pull up the stuff over on the right-hand side that's in the green box, and that's where you can be able to sign up for your local chapter news, whether you're in the Maryland or DC chapter. If you're outside the area, whatever chapter you're in, you will be able to get that. But before you hit that Save Changes, which you have to do, is I highly recommend that you go on up where that yellow underline is, the BI Weekly Newsletter, and in there you can be able to sign up for their weekly newsletter with information coming out from headquarters. And we'll show you on the next slide what you get with that. So this comes out, it's just for members, but what they do is they highlight some of the stuff that's coming on. And again, we had the first of 2 weeks of virtual BINC on Saturday, and the second one will be this Saturday. And so please come and join us for that. But there's also a lot of webinars like Ticker Talk and Stock Up that are all there. And this weekly newsletter gives you all the information on it. And it does come out around the close of business on Thursday. If you signed up for it and you're not getting it, check your spam filter. But they did have some interesting ones about, sort of migrating over to a new brokerage that they have a relationship with, Muriel Siebert, as well as some newer things that are going on with some of the things with, I think they made some updates, a little hard to see here, but I think it was with the some of the changes that have happened with the SSG. So let's go to our next slide. So we also have it up on Facebook. I was a little delinquent in getting it out, not until yesterday, but we do get some little bit of traffic there. Again, a great way to be able to reach out to both BI and non-BI members, and you can share that on your own group. I think our demographics, we tend to like Facebook. We're not necessarily Instagram or Twitter folks, but you never know. But anyway, there's the links to be able to join us, and we'd love to have you participate with us there. Next slide. Brian, you want to tell us about what's going on in the Maryland chapter?
Yes, I can do that. As soon as I get my microphone down around my mouth. The Maryland chapter is doing fine. Everybody is increased from the last report, and it looks like there are 3 now that are in the black. Everything's looking fine. Hopefully everybody will be in the black soon.
And I know you're having your, Roger likes to do his review of the top 100 stocks of BI that comes out with the cover magazine in April. And I think that's going to be sometime this summer. It got postponed, but really a good presentation. It's free. So be alert to that for the Maryland chapter when you, even if you're outside the area, we'd love to have you. Let's go to our next slide, Cheryl.
I think it's going to be in July.
There it is, July it is. Cheryl, to you. Cheryl, you're muted.
That's what happens when you're looking at the page and everything else. DC chapter has a book discussion called Money Matters that we put out every month except for December. This next book is The Bond King, How One Man Made a Market Bull Empire and Lost It All by Mary Childs. Is on the 3rd Tuesday of every month. And so the next one's going to be on the 20th, and they are online, they're virtual. And if you go to the events page for the DC chapter, you will see it, as well as they have it here for looking at the link. But it is free and it's open to visitors, and please join us.
Let's do the next slide. And Cheryl, I just added this one at the last minute. This is our annual meeting, since it's at the end of this month. You want to take care of that one as well?
Sure. We are having our usual annual meeting. That's a requirement for the chapters, and it's on the 24th, which is a Saturday of this month, from 10:30 a.m. to 1 p.m. And we have as our guest speaker Doug Gerlach. He is the editor-in-chief of iClub. He's going to have 3 programs that he's going to talk about: 4 Strikes and You're Out, which is about stock selling, his favorite stocks for 2023 and beyond, and his key rules of stock investing. So please join for that as well. That is free and open to visitors as well.
Thank you.
And the link is on the DC events page.
Let's go on to our next one. Richard, tell us about your club.
Okay, thanks, Kevin. We started in 2017 at the Montgomery County Model Investment Club, MCMC. We meet on the 3rd Wednesday of every month from 7 to 9 online. Since COVID, we've stopped using the library. The education for this coming up in June will be linking your SSG to My iClub. The stock to study is going to be determined.
That's a very popular stock, the to be determined one. Let's go to our next slide, please. Thank you, Richard. Cheryl, go ahead.
All right, we've got the DC regional chapter also puts on one of our, you heard Richard talk about one of our model investment clubs, and this is the second one. We started in 2008, and currently we have 12 partners. We just added another partner. We meet on the second Tuesday of the month from 7 to 9 p.m. We've also remained virtual, even though the libraries have reopened. Therefore, you don't have to fight the traffic to attend our meeting. And you can do it by phone or by link to your computer. Education is what I wished I'd asked about, my stock inheritance questions. And FactSet research systems is the stock study for this month. And please join us on the 13th of June.
Very good. Let's go to our next slide.
This is Pinnacle Group Investments, and we are over 25 years old. We have 8 partners. Normally, our meeting is on the second Saturday of each month, but due to the virtual bank last Saturday and this coming Saturday, we moved our meeting to our quarterly administrative meeting, which will be on Thursday evening at 7 p.m. Again, typically, it's from 10 to 1 p.m. on the second Saturday of each month. Our education, in our next meeting, we are reviewing videos and discussing projecting high and low PEs. And we are still reviewing the investment book, Take Stock. And the next stock that will be studied is Balchem.
Very good. And last but certainly not least, let's go to our next slide and let's hear all about VCIC from Janet. Thank you, Rudy.
Hi, we also started in 1996 and we're celebrating our 27th anniversary in July. We just lost a partner who's moving to Delaware. And so we have 12 partners now. We meet the first Thursday of every month and via Zoom. We have education. I'm going to do something we've learned from Virtual Bank, and the stock study is going to be a Schwab, because some of us were in TD Ameritrade and we've gone, and not our club, but some of the individuals will be moved to Schwab, have been moved to Schwab. Actually, our club uses IBKR, and I am the point of contact.
Very good. Glad to see your club's doing well. Let's go to our next slide. And Cheryl, tell us about the Visit a Club program.
Well, we have 2 separate Visit a Club, 2 distinct activities. One of them is a list of clubs that are looking for members, and you can see the listing here for both the DC Regional and Maryland chapter. And we also, if your club wishes and contacts us, we can set up a visit to your club by a DC chapter director. And we have done several of them this past month and gotten very favorable reviews from the clubs, the presentations that we put on. And they have told me that they've learned a lot from them. So please let us know if we can either put you on the list for looking for a member, or you are looking for a director to come visit your club, either virtually or in person.
And it goes ditto for the Maryland chapter. I know they do the same stuff. So let's go to our next slide. All right, so this is digging into the BI. I haven't received my paper copy yet of the June edition, but you can get it on the app over on the left-hand side, or you can get it in the e-magazine. I've asked periodically if anyone reads it on the app or the e-magazine, and the most I get is some people will look at the e-magazine. It comes out earlier to do this, so you can catch it that way. But I think most of us still like to be able to hold that magazine in our hands. But you can look at this on your computer, laptop, tablet, smartphones, or any other electronic device. Let's go to our next slide. And so here's where you can find additional information with any of the, if you see where the green arrow is over on the left-hand side, that's how you can be able to set things up to be able to get it on a mobile device. It's a different sign-in than what you have for your regular one. So you just sort of click on that to follow that. And then right below it where you have the red arrow, that goes to the analyst reports and other resources. With the featured stocks, the stock to study and undervalued feature, they have additional information that doesn't go into the magazine, and you can be able to click on that and you can see some additional information there. So if you look at one of those stocks, be sure to take a look at it there. And if not, then for the e-magazine, if you see in the center where it says view magazine issues in the green background, that's where you click. And if we go to our next slide, that's what we'll see. And we will feature one of our stocks, or one of the stories. And this one that sort of caught my eye was a cash flow column. And it was just talking about how you can get these incredible yields from REITs. Now, normally we wouldn't hold REITs in a club because of the fact that it gets kind of confusing with the tax implications. But as this story was pointing out, and having just done a book report on Benjamin Graham's The Intelligent Investor, he does talk about the value of getting decent payouts. And those high growth companies generally don't give you those great payouts. But the thing is that value stocks, and this is a great opportunity and great time to be fishing for value stocks, can be quite profitable. They can trade at lower multiples, and they often pay those generous dividend yields much more so than those high growth companies. So whether it's a REIT or some of these others there can be a great opportunity. So go ahead and read that article, and we'll come back to some other ones for next month. Let's go to our next and final slide before we start talking stocks. So this is the event page at the end. I found two of them that were sort of interesting that were free, one from the St. Louis chapter, where they have row your boat or float your boat. And then another one on creating a retirement paycheck. Those are both free at the end of this month. And Kent, I see your Alabama chapter, the Emerald Coast, is they're having their annual meeting in about a week or so. So you can go hang out with Kent DeYoung if you want to. But anyway, that's the first one up there. Let's go to our next slide and let's start talking some stocks. So the first two we're going to do in core, and it's going to be the stock to study, which is UPS, and then Rudy's going to tell us about Descartes systems. So let's go to the next slide, and Brian, it's all to you.
Thanks, Kevin. Good evening. I'm Brian Koenig, volunteer from the Maryland chapter. Tonight, United Parcel Service Incorporated. It's on the New York Stock Exchange under UPS. It's the June 2023 BI magazine stock to study. Next slide. United Parcel Service was started in 1907 as an American messenger company by a couple of teenagers with a $100 loan. In 1919, the business adopted the current name UPS. Later on, it bought Mailboxes R Us, Mailboxes, etc. Was acquired in 2001, and then more recent acquisitions were Startup Business Delivery Solutions, Rody in 2021, and Bomai Group in 2022. UPS currently operates in more than 220 countries and territories, more than 500,000 employees around the globe, and UPS is a transportation and logistics leader that offers innovative solutions to customers, both big and small. Next slide. Although UPS has global reach, it's easy to see that domestic operations remain dominant, over $64 billion in 2022 revenue. International packages contribute another $19 billion, and supply chain solutions brought in a respectable $16 billion. A quick note, Supply Chain Solutions is a logistics management and consulting company that partners with companies to develop strategic procurement processes. In the lower left, you note that the total revenue has been increasing each of the last 3 years to the total revenue now of over $100 billion. Next slide. Here we talk about the strategy in that. It's a strategy of customer first, providing a better, not bigger framework, focusing in high growth areas such as healthcare, small business, and international markets. UPS not only moves packages, it also works with businesses to provide shipping services and expand online capabilities and to simplify returns. Next slide, please. Some of its competitive strengths are its global smart logistics network and global presence. Its cutting-edge technologies include efforts to streamline processes using RFID or radio frequency identification chips to improve the throughput of movement of packages. Through its broad portfolio of services, the UPS not only moves packages to from companies, they work within the companies to improve their internal processes. Distinctive culture is easy. Brown trucks with brown clad operators. We see them everywhere. And finally, their financial strength puts them above the competitors, with FedEx running a close second. Next slide. Here is the description box for UPS. The price is about 2 weeks old there, but it closed on June 2nd at $170.14. So it didn't change much in 2 weeks. UPS is an integrated freight logistics industry in the industrial sector. As noted earlier, the FY 2022 sales topped 100 billion, putting UPS in the large company size. Morningstar gives it a financial health of B. And one other item in the description I haven't mentioned is UPS delivers an average of about 25 million packages a day worldwide. Next slide. Now we'll get into the SSG. Here in the core SSG, tab 1, step 3 is showing the historic sales, earnings per share, and 52-week high-low prices. The top green line is the historic sales. As a teaser, I've shown my projected growth rates. These will be further explained in a couple slides. But before we leave this slide, I'd like to point out the high-low prices from 2013 to 2019, then again from 2021 through 2023. 2020 is a year when the prices had a dramatic increase, then appear to have settled down to shallow growth again. I'll talk more about this near the end. This might lead one to expect the PE ratios to be decreasing during these years. Nearly constant prices with increasing earnings per share. And I wrote in parentheses, ugh, fractions. I'll bet some of you were thinking that. Next slide. Here's the evaluation of management, tab 2, steps 1 through 4. In step 1 on the upper left is a percent pre-tax profit on sales used to identify well-managed growth companies. This should show steady or increasing values. Other than the big dip in 2020, it appears steady around 10% with a recent jump to around 14%. Step 2 on the top right is return on equity. This tells effectively how the company management is using the shareholders' money to make a profit. This too is desirable to increase or at least staying the same, unless the company is paying off debt, which leads us to step 3 down on the lower left, which is total debt. As previously mentioned, the UPS has been expanding through acquisition of other companies. This has required some debt, as shown here. It looks like the UPS has a total debt of around 25 billion. This is about 1/4 of the yearly sales. This sounds like a lot if taken alone, but we must now look at step 4 over on the bottom right, because we have to look at the debt to capital. You notice there that even though the debt has remained constant the last couple years, the company's capital has increased significantly in order to get the debt per capital fraction again. Capital's on the bottom, so the bigger it gets, the smaller the value. So it looks like the 25 billion for UPS is manageable. Slide 9. Next slide. Okay. Tab 3, step 1. This is a forecast in sales. We look at the forecast sales, or the historic sales. It looks like it was about 7.2%. However, starting in 2021, it looks like it's slowed down to about 3%. And looking forward, the first quarter in 2023 also looks like it's going to remain at about 3%. So you notice down on the bottom there, I selected 3% as to forecast my annual sales growth rate. Next slide. Okay, tab 3, step 2, the forecast earnings. Here, the historic growth was around 15% for earnings per share. I thought that was okay, but if we look at the due to the slow growth of about 3%, if the see slow growth 3, the last 2 years from 2021 2022 has decreased, and the first quarter is also decreased. So I looked at the analyst consensus estimate of 6.6%, and I thought that that would be reasonable with a 3.3%. I also did another thing, which is I extended it from the trend line noted there in the red circle, not the annual or quarter data, which is just above the circle. Thanks, Cheryl. And the reason I did that, again, that's more conservative. And with that, the extended price is going to be $16.20 when we use to calculate the high price. Next slide.
5 minutes, Brian, 5 minutes.
Okay. If we take the 5-year projected earnings per share of $16.12 and multiply that by times the PE of 17.3, we get an estimated high price of $278.80. For the low price, I took 80% of the current price of $170.14 to come out with $137. So that's the high price and low price. And then over on the left are the division lines between the buy and a hold of 172.50 and between the hold and a sell of 243. With the recent price of 170.14, it's just below the 172.50. To get the upside downside ratio, I take the high price minus the current price divided by the current price minus the low price, which comes out to 3.3, which we would expect since it's just about on the 3 line. Next slide. Okay, to determine the 5-year potential, we look at the percent payout. They've been reasonably consistent around 60 or 70%. There were 20 and 21 were outlier years, so I deleted those, which gave me an average 5-year payout of 62.4%, which seemed reasonable. The compound total return, if we look at the potential annualized price increase from 170 to 238 would be 10.4%. The yield of 3.6%, that's the current yield. I'm sorry, the yield, and the annual rate of return of 14%. That seems reasonable, and the current yield, the 170.14, is 3.8%. So it's got a nice dividend. Next. Okay, this is what I wanted to talk to you about the prices. If we look at the lower left, the green dashed lines, that was a price from around $80 up to a little over $120, and that stayed in that channel until about 2021, as we saw before, and it increased. And it looks like it's establishing a new channel somewhere a little over $200 down to about $160. My little red arrow there on the right is showing that recently it looks like they're having lower lows and lower highs. The price is going down to the $170 that we just saw. And then if you look down at the bottom, the relative strength index is an indicator that it's below 50% or 50, and that means that it's in the oversold condition. So that might indicate that it's a buy. The reason that I put these on there is with the price, it looks like it gets in a channel for a while, but that doesn't mean that one couldn't make money if one wanted to give it a little more attention. Get some alerts that alert you when it gets below $175 and alert you when it gets above $195. and maybe buy a couple shares down low and sell one up high and keep accumulating them over time. That's what the this chart is supposed to be in there for. Next slide. To wrap it up, it's UPS is a large size company. It's well managed. It's currently in the buy zone. We've seen the close values there. It's trading below its 5-year average. It's about 80% undervalued right now. The current dividend is 3.8%. And as I said, if in a portfolio, would consider adding to the position with current share price within 9% of a 52-week low, which would be $154.87. I believe that's it. Thank you.
Thank you, Brian. Great job as always. And next we have another returnee being able to show us all what the Pinnacle Group Investments does. Rudy, it's over to you, and let's hear about Descartes.
Thank you. Descartes is a Canadian company that's listed on the NASDAQ, and it's a small company, which, next slide, which I found using a screener. I used the predefined screener for a small company and located it. And I must confess, I did not meet requirements because I use SSG Plus, so we'll just ignore what you said earlier. Next slide. It was founded in 1981. It went public on the Toronto Exchange in 1998, and then went on the NASDAQ in 1999. I mentioned they were a small company, and they are in the technology sector. Next slide, please. What do they do? Descartes is a technology company that provides solutions in the retail, manufacturing and distribution, transportation, logistics, and field service industries. I'll talk a little bit more on the next slide. In the retail sector, they have a logistics network, and they have an array of logistics management applications that is combined with their trade-related intelligence. And so basically, they do software as a service. So they have cloud-based applications, one of them being capabilities for retail. And I highlighted the e-commerce fulfillment to show you a little bit more about that on the next slide. Next slide, please. So in the commerce and fulfillment area, I wanted to focus on their marketplace integration, fulfillment, the warehouse management, and their international commerce. So those are the services that they provide to their customers in that industry. Next slide. Under manufacturing and distribution, I wanted to highlight their intelligence is in import-export compliance. Transportation management is a major service. Real-time visibility. They have a way of displaying information so customers know exactly where their products are. And they do their shipping and inbound and outbound distribution. Next slide. Under transportation and logistics, I wanted to highlight that they have their network is best of class. They also offer, in addition to the software services that I previously mentioned, they have back office systems. So companies can get practically all of their services in the cloud. And they, of course, have their warehousing management system. Next slide. And under field services, that's where they provide information on allowing you to track your appointments, your sales calls, and providing that information, managing that entire experience for your company. Next slide. So how do they make money? Being that they have a software as a service model, it's a subscription service. So just think of, you having your cell phone coverage. And so whoever your provider is, they get that monthly money. And so that is, it's a recurring revenue stream for them. And so that's basically how they make their money. Let's move on to the next to see who they make it from. And so these are their customers. And you can see in air, ocean, trucking, whatever not sector, but whatever segment you're in, you see they have the major companies in those different segments. So you see in the airline industry, trucking industry, if there is a company that is prominent, it is one of their customers. Next slide. And you can see from these graphs, the black line is are their numbers. In terms of percentage pre-tax profit on sales, they are above the industry and peer group average. Historical EPS, they're well above the peer group average. Next slide. And in terms of debt to capital, their debt is below the peer group and industry average. So who is doing this? Next slide. These are the board of directors, and most of these people are they run other businesses, but they provide direction to Descartes. Next slide. But this is their management team, and as you can see from the data, their pre-tax profit on sales, their return on equity, their debt to capital, all the trends are in the right direction, and all the numbers are very good. So they really do a great job of managing the company. So let's go to the next slide. I use various sources. First of all, in Value Line, there weren't very many analysts that have looked at this company. And so I looked at Market Watch, Value Line, Yahoo Finance, of course, member sentiment. And I came to the conclusion that I would use 15.3 as their growth. Their growth over the last 5 years have grown more than the previous 5 years, and I expected it to do that in the future as well. I didn't actually take an average, but I'm a little higher than member sentiment because I took into account some of the other sources, which were a little higher. And then historical earnings per share came in at 12.7. Next slide, please. On this slide, just a note that looking at their the high earnings per share, the PE ratios, you can see that the PE ratio is trending down. And just keep in the back of your mind that the current price earnings ratio is lower than the average PE ratio. Next slide.
5 minutes, Rudy, 5 minutes.
Okay. And then what I did though was I used, which is not typical, but I used the average high PE because it was trending down. Also, I did it first, and then I looked at member sentiment, and it was in line with member sentiment. It was also in line with some of the other sources that I told you about. And low PE, I just took 80% of the current price and came up with 73.3 and 49.0 respectively. Next slide. What I wanted to point out here is that it came out to be a buy at a 6.0 to 1 ratio with a annual compounded return on a high P of 16.9 and average 12.7. Let's talk about growth. Next slide. So in the past, as you can see from the numbers here, they've had strong and consistent growth. And we expect that to continue, because I'll show you how they got there. Next slide. Their model is one of merger and acquisition. Basically, they buy up the competition and they buy up the best that's out there. So since 2015, they've done 28 acquisitions. Since 2006, they've acquired 50 companies. And they're positioned to continue to do that because you can see on the top right-hand side, they have $276 million in cash equivalents, and they also have an acquisition line of credit of $350 million, and that they can take that up to $500 million. That doesn't expire until December 2027. So you can see all the companies they acquire over time, and their superpower is integrating these companies so that they become efficient and more efficient than they were standing alone. Next slide. And so in conclusion, they're a small, steady growth, small size, steady growth company. They're excellently managed. I showed you that with the trends. It's on sale, and it's a buy up to 83, and it's a worthy candidate to add to a watch list for purchase. That concludes my presentation.
Thank you very much, sir. Great job as always. And now we're going to look at the stuff in Plus. And to start things off, we're going to have Richard do Truist, and then finishing up with Janet doing Nova. So over to you and the undervalued feature, Richard.
Okay, thank you, Kevin. Tonight, as Kevin mentioned, I'll be doing Truist Financial Corporation. It's listed on the New York Stock Exchange under the symbol TFC. It was in the June 2023 issue of Better Investing Magazine as the undervalued featured stock. Next slide. The industry that it's in is regional banks, sector is financial services, and the super sector is sensitive. It's a large company with 23 billion in sales. Next slide. One of the things I should disclose is that this is the first bank stock that I've actually analyzed. So I went to the Better Investing video library to do a little research to find out what I should be looking at. And I found at least 5 excellent videos. Joe Farrell, Ross Meredith provided some valuable information that I utilized. Next slide. Truist Financial Corporation is a bank holding company headquartered in Charlotte, North Carolina. Since 1872, it has made more than 100 mergers and acquisitions. So the latest one is with BB&T Corporation and SunTrust in February of 2019. And Truist Bank is a primary subsidiary of TFC, formed out of the merger of the banks. The services include retail and small business banking, commercial banking, corporate and investment banking, insurance, wealth management, and specialized lending businesses. So they're very well diversified, as seen on the pie chart in the upper right. They have a number of different opportunities. It is the 7th largest U.S. commercial bank with 413 billion in deposits. Next slide. It leads deposit market share across its footprint in 2,100 branches, primarily in the Southeast and the Mid-Atlantic regions, as shown by the dots on the map. It is the largest regional bank-owned investment bank in the U.S., and more than 1/3 of all its deposits are non-interest bearing compared to the industry average of 26%. This tends to lead to more consistent earnings performance, and we'll see that on the SSG. The earnings have been a steady growth rate, which has been excellent. It also can lead to underperformance in a rising interest rate environment, which we've had, but it doesn't show up in their earnings. So that's some good news. Next slide, please. So what are the TFC banking metrics? Banking metrics are used for banks to determine how the bank has been performing. And the video library provided me with 4 that I looked at. The first is the efficiency ratio, which is the percentage of non-interest expense, which are the overhead costs, labor, pens and pencils, electricity, rent, etc., divided by revenue. And good is less than 60%, and less than 45% is even better. But TFC came in at 63.3, a little bit high. So I flagged it as a red, as something to consider perhaps later on. Net interest margin was the next one. It's the interest income minus their interest expense divided by total assets. So you'd like that interest income to be high and interest expense to be low. So the good is about 4%. And again, TFC came in a little low at 2.6%. The third metric that I looked at was loan to asset ratio. So you'd like to have more of your assets earning money divided by total assets, and good is usually 60 to 80%, coupled with loan growth of 4 to 5%. TFC came in at 57.9%, which is close to 60, and I didn't flag it this time. However, I also considered that the 3-year loan growth since the acquisition of BB&T and SunTrust is running about 2.5%. That's a little bit low. But Value Line projects in 2026 to 2028 timeframe, loan growth should be up to 5.2%. The fourth and last metric I looked at is loan loss provision. So banks hate to have delinquent or defaulted loans. Cost them lots of money to manage the property or asset and then sell it. So but they have to put aside provisions for that loan loss. Generally, less than 1% for the last 10 years is considered good. TFC is currently at 0.14% in the last year, so it's been excellent. I noted it's from something called the Uniform Bank Performance Report, which I had no idea until I was reading the video, watching the video library. And it's a hot link to the UBPR, and it provides a plethora of information on banks. You can sort competitors, and it'll probably take me another 5 or 10 years before I fully can utilize it. It's quite overwhelming, but I did manage to pull some information from it, and I want to note it here. The other sources of data is the bank annual reports, the stockholder presentation, their annual 10K, and Value Line itself. Next slide, please. So let's jump into the SSG analysis. Next slide. So in the upper left, I'm showing the sales, assets, pre-tax profit, and earnings per share lines. And I broke it into 2 segments. You can see that there's a large jump in the 2019 to 2020 timeframe in sales and assets. That's due to the acquisition of BB&T and SunTrust. So I broke the sales and asset growth rates into 2 segments, one before and one after the merger. So as far as up, straight, and parallel, they're generally trending upward. They are fairly straight and they're roughly parallel, so I was pretty happy with that. And I mentioned that in 2020, and sales took a jump. In 2019, assets took a jump. That was due to the acquisition. Normally in stock analysis, the price follows earnings, follows sales, and with banks, that follows asset growth. So we want to look at asset growth as well. So 10-year earnings per share growth was 7.5%. That's been fairly consistent, and due to their low non-interest bearing deposits. Post the TFC, which is after the merger of the BB&T and SunTrust, sales growth, as noted by the the arrow at the top on the left, it's been fairly flat, growing about 0.7%. And before that merger, it was growing at 4.2%. So there's been a slowdown in sales growth, noted. After the merger, 3-year asset growth was 4.4, and before that it was 4.3. So the asset growth rate has remained roughly the same. Also, I noted that the first quarter of 2023, earnings per share were up about 6%. Sales were up about 15%. So there's increasing sales and earnings per share happening, which is a positive trend. Percent pre-tax profit is at 32%, which is good. Debt to capital is up due to acquisitions. But if you look at the debt to capital 2022, it's 51%. It's not that much higher than it was in 2018, and it was trending downward. So I'm reasonably happy that I expect them to get their debt lower. The last row is the return on average assets, which is only shown for banks. And that we'd like it to be more than the 1.25%, and 1.5% is even better. TFC was 1.06%, a little low. But in the first quarter of 2023, it moved up a little bit to 1.14. So that's a positive trend. Next slide.
About 4 minutes, Richard, 4 minutes.
So I looked at the shares, book value, and dividend. Number of shares took a large jump due to the acquisition in 2020. And book value took a dip in 2019 and 2022 due to acquisitions. And the stock is currently trading near its low. It's selling for 3/4 of book value, suggesting it might be a value stock. Dividend has continued to grow nicely. Next slide, please. So looking at sales growth, I looked at a number of sources: Value Line, Member Sentiment, CFRA, Yahoo, Zacks, Morningstar, and listed their estimates there, and took the average vertically and compound annual growth I calculated horizontally. So the average for all the data was 5%. In the last 2 years, we know it was about 0.7%, and before the merger was 4.2. So I took a sense that based on the disappointing metrics, the growth in debt, I took it a little bit lower, so I averaged it out to about 3.5% growth rate. Next slide. Used the same format, used Value Line, Sentiment, Manifest Investing, and Morningstar to compute the average compound annual growth at 5.5%. Generally, I like to keep the earnings per share below the sales growth rate of 3.5%. Historically, it was running at 7.5%, but I don't think they're going to achieve that in the near term. And preferred procedure had 2.9%, so I decided to go with 2.9%. Next slide.
2 minutes, Richard, 2 minutes.
Okay. High PE of 15.7 and a member sentiment PE of 14.6. I felt we're overly optimistic. The current PE was too low based on the stock price being near its low. My judgment was to choose a PE, a high PE, centered on the average PE of 12.8 and the 52-week high price divided by the trailing 12-month earnings of 11.9. So I chose a high PE of 12, and that yielded a high price of 61.3. Next slide. Low price, again, I considered the average low of 9.8 and member sentiment. Mean low price of 9.3 too high, because the low price would end up being about $41 a share, which is higher than the current price. The current PE is 7.3. That yielded a low price of 32.8, still high compared to the current price. Low 52-week low divided by the trailing 12-month earnings was 6.4, which was an option. I also considered 20% below the current price and chose a low PE of 6 as a compromise, yielding a low price of 26.9. And I'll note that that's 6% below the 52-week low, which I felt was comfortable. And we'll see that may not have been as comfortable as I thought. Next slide.
1 minute, 1 minute.
I'll take 2. So the upside downside ratio turned out to be 5.1 to 1, total return 17.3% with an average yield of 3.9. That was very good, a solid buy. Next slide. If you'll note that the original work was done on April 28th. I looked at the prices on May 9th, about a week later, and the low dropped below my 26.9 low estimate. So it validated the upside downside ratio. So I had to take a second look at it. And the one thing I hate is chasing the low. So I decided to take a draconian approach and drop the low to 20% below the recent week 52-week low, and that's about $20 a share. Next slide. To my surprise, the upside downside ratio was 3.8 to 1. And so it's still a buy with the total return at 20.3%. At the Friday close, the stock price had moved back up to nearly where it was at the end of April. And the upside downside ratio is now 2.4 to 1. So I'll leave the judgments to the viewer. Next slide, please. So in summary, TFC is a bank holding company. It's seventh largest in the US, seventh largest commercial bank. It dominates its competitors in the Southeast and Mid-Atlantic states. And the growth is enhanced by faster growing economies in that region. It has good dividend growth with a current dividend of 5%. It's perhaps not the best in class by the metrics, but it shows consistent earnings per share growth. The risk reward ratio is 2.4 to 1 actually right now. Total return is about 17%. It appears undervalued at its current price, a little bit less so with the update. And I would recommend TFC as a candidate bank stock for future studies. That's it.
Thank you very much, Richard. Great job. Glad to have you part of it. And last but certainly not least, let's hear from Janet Lewis and let's hear about Nova. Take it away, Janet.
Oh, thank you. Well, actually, I got Nova from the stock screen where I was looking for something with high growth, small company, which is what I'm focusing on lately. And technology is our world right now. And then I went and to see if anybody else has done anything on NVMI Nova. And sure enough, there was a first cut report and another article like in 2019. So I was pleased. Next slide. So Nova is a leading innovator and key provider of metrology solutions that semiconductors use. They were incorporated in 1993 in Israel, and in 2000 they went public with NASDAQ. They changed their name in 2021 from Nova Metrology Solutions to Nova Ltd. Between 2008 and 2000, until 2008, most of their products were sold to process equipment manufacturers like Applied Materials, and they sold them to the semiconductor manufacturers. Well, then Nova decided we'll sell them ourselves to the semiconductor manufacturers. Then and of course that improved their gross margins and profitability. Between 2015 and 2021, they had acquired Rivera. It's a privately held company in California that develops and manufactures and sells standalone metrology tools, that's measuring tools, of thin films and composition applications. By 2022, they acquired Ancosys, which is a privately held company in Germany. And that's a leading provider of chemical analysis and metrology solutions. So now they have support for both front end and back end semiconductor manufacturing. By the end of 2022, they had 6 direct, fully owned subsidiaries in the US, Taiwan, Korea, China, Japan, and Germany, and 1 indirect one, fully owned subsidiary in Germany. Next slide. Their market offering is driven by 3 product divisions. The Dimensional Metrology Division, they are responsible for optical technology-based solutions, integrated and standalone. Then they have a Materials division, and they're responsible for X-ray and secondary ion mass spectrometry-based solutions. And then they have a 3rd division, Chemical, which is responsible for chemical metrology and replenishment solutions. Now, over all of this, their corporate units, marketing, next generation technology, human resources, finance, global business group, they support all the divisions. And that structure allows the company to focus management attention on each product line separately, as well as to facilitate the integration of any additional businesses or technologies in the future. Next slide. Their product portfolio deployed at the world's largest integrated circuit manufacturers combine high precision hardware and cutting edge software. And that gives their customers a deep insight into the development and production of the most advanced semiconductor devices. So Nova does not make semiconductor chips or devices. They are the quality control people that help the semiconductor manufacturers. Their capability to deliver innovative optical, X-ray, secondary ion mass spectrometry, and chemical analysis technology solutions help their customers improve their performance, enhance their product yields, and of course, accelerate their time to market in a very competitive world. Next slide. So how do we get from sand to a wafer? Well, the semiconductor manufacturing process starts with sand. They make silicon to a flat silicon disk that's known as a wafer. Now, this is the semiconductor manufacturers, not Nova. Then upon this wafer, integrated circuits are constructed. To construct those integrated circuits, there's a series of layers of thin films, and they act as conductors or semiconductors or insulators, and they are applied. And then during the manufacturing process, these film layers are subjected to processes that remove portions of the film and create circuit patterns and perform other functions. Then the semiconductor manufacturing process requires numerous precise steps and strict control of equipment performance and process sequences, and they need Nova for this. Tight process control can be achieved through monitoring the silicon wafers and measuring relevant parameters, and it has to be done before, during, or after each process step with these metrology tools. Next slide. So Nova intends to increase its focus on the evolving materials engineering market. The demand to precisely characterize and control materials composition, the thickness, the stress, and more is growing in advanced memory and logic nodes, and it requires innovative metrology solutions. And Nova has Ellipson, Metrion, and Veriflex platforms they sell that aim to provide such capabilities. Next slide. So in our world, an environment of growing complexity in chip design, and it's going to keep becoming more complex, that sets a favorable business condition for process control demand. When you're on the operating table or in a car, you do not want chip failure. Industry data indicates a worldwide demand for semiconductors that will continue to grow, driven by the growing adoption of 5G, advanced network infrastructure, automotive, artificial intelligence, the Internet of Things, as well as the network and data centers thriving from work from home, learn from home, buy from home, and gaming trends. And several technical and operational trends within the semiconductor manufacturing industry are strengthening the need for more effective process control and metrology solutions, because everybody wants smaller devices, transition to 3D, faster time to market. Next slide.
5 minutes, Janet, 5 minutes.
They have had significant growth to record levels in 2022. Their future goals include continuing collaboration and joint research programs with leading semiconductor manufacturers and relevant leading research institutes. And they intend to continue their products innovation and diversification through several new product introductions and the company's market leadership and total available market. Next slide. So I looked at our competitors, and in the stock screen, I had originally gone for technology, and then I did the sort and brought up the semiconductor equipment and looked at those, and then some other that Yahoo and different places on the internet had as competitors. But in the bottom line, it seemed like Camtech was the one that really was closest to Nova. So I looked at those two. And next slide, please. I did a stock comparison guide. And of course, on the right-hand side of this screen, it shows what the stock screener, you can show the little analysis chart. And they look pretty much the closest. But because of the stock comparison guide, and because of what I was reading in the annual reports and on the internet and about the companies, I decided to go with Nova. And notice the price is at the top, but the price charts, price lines are squishing down. So people are beginning to narrow what they're really thinking these companies are worth. Next slide, please. I looked at Value Line and I looked at all their quarterly sales because and their earnings per share, and notice the numbers continue to go up every year. And even though in the SSG the quarterly figures were not real good, we all know what's been going on in recent times and months. So I was not real concerned about that. When I looked at the sales growth and earnings per share growth, I'm not real thrilled when I see more than 3/4 going down, but it wasn't at the zero growth. And I have such confidence that we are in a world of technology, and that when this economy finally breaks loose on getting supplies and getting the people to work, we're going to see some phenomenal things, and they're going to need chips to do it, and they're going to have to have good quality control on making those chips. Next slide.
2 minutes, Janet, 2 minutes.
I looked at Morningstar. It's undervalued. But what I am really concentrating on often, I look at the current assets and I want to make sure that they can cover the current liabilities. Yahoo also has this as a buy. Low debt, of course, they have the lease debt, but no debt. And next slide, please. I looked at the way that their growth has been going up, and their return on equity is above 15%, pre-tax profit above 15%. I don't usually go so high on my forecasts, but again, I have confidence in this company. So I went ahead and thought I would go ahead with this, and amazingly, member sentiment had the same. Next slide, please. I again looked at how the prices were rising over the years, the PE ratios were going, and I did get rid of 2018. In 2016, they paid off a royalty, and that might have had some impact on what happened in later on. But I just thought that the PE ratios didn't really fit in with the other ratios in those high and low ratios. I do not go as high as an average 39 PE ratio. Back in the day, I used to only go 24 as my high PE, but I looked at their current PE ratio, 25, it's below the average PE. So let's go to the next one, and $111.52 was the price when I did this on the 26th. I went with the average high PE of 28. And then I came up with $248.90 for a high price. That was more than double what the current price was at the time I did this SSG. And for the low one, I went ahead and took the recent market low price. And that gave me, next slide, gave me a 3-to-1 upside downside ratio. Now, notice that the current price at that time was $111.50, which was at the top of the buy thing. By the way, I do own this stock. I bought on a limited order, though, and I got it below what this price was here. Today, it went up to $112.75, but as you know, by the hour, things are going up and down recently. But I felt pretty comfortable. I mean, total return, high PE, 17.4. 3.1 to 1 upside downside ratio. The projected average return above 10%. I like that. Next slide, please. So my conclusions were that Nova is a small size, but it's fast growing company, and it's an excellently managed company from what I could see. It's fairly priced at $111.52, although I wouldn't pay $111.52, not right now, but it is trading near its 5-year PE. It is a buy up to $112.80 according to my SSG with a 15% total return and 3-to-1 ratio. I think it's a worthy candidate to add to your watch list or to purchase when the price is right.
Very good. Thank you very much, Janet.
Sorry.
We're ready. We've gone through those and we went through them pretty quickly. So now what we like to do is we like to ask all the presenters here to just sort of give us a quick summary. We like to use the life cycle graph image that was really sort of it's a graphic representation of what T. Rowe Price talked about with companies. So he talks about how companies have passed through a life cycle just like a human, where there's growth, maturity, and decadence. And we'll go first to Brian. You've marked this up towards the end of mature growth. Can you tell us why you selected that spot for UPS, Brian?
Well, they already serve over 200 countries, so there's not too many more countries they can expand into. They can just buy companies that are already existing, and the explosive growth, I think, is well behind it. I don't think it's in the declining. So that's why I kind of put it about the middle of the mature growth.
Very good. Okay, and Rudy, tell us why you picked that spot for Descartes.
I picked that spot because they're well past explosive growth, but I don't think they're at mature growth yet to where it'll start to level out. They're still incrementing their growth, and so I think over the next 5-10 years they'll still be growing, and the rate of growth will increase slightly. So that's why I put them there.
Very good. Richard, why did you pick that location for Truist?
I felt that it's a fairly large company. It's the 7th largest commercial bank. It's in the mature growth sector. I think it has some growth ahead of it, but not much more. And I think it'll go into the stabilization phase in the next 5 or 10 years.
Okay. And Janet, tell us why you picked Nova as an explosive growth.
Well, it is a leading innovator and a key provider to some of the key semiconductor companies, and our whole globe is seeing a growing use of semiconductors, chips, and circuits, and it just seems like everything is going to end up needing a chip. And if you need a chip, you need something to really make sure that it is done properly, and it takes very complex software and hardware to do that. And Nova has been concentrating on that.
Very good. Okay, let's go to our next slide. And we've been talking. Now it's time for you to be able to vote with your thing. So Cheryl, if you can be able to release the poll, and we'll let all of our audience, no panelists, get a chance to vote on this. And at the same time, I know we have our backroom folks that are looking at the questions. You can raise your hand, or you can sit there and type in a question, and they will dole it out to all of our presenters. So let's see how we're doing with our polling. Okay, we're about 50% of you. It's a dead heat, it looks like, between a couple companies. Let's see what's going on. We're at about 65. Let's see if we can get it up a little bit higher. Okay, we're getting some late votes. Those River Ward precincts are just coming in right about now. Okay, it looks like things are slowing down. 5, 4, 3. I just got a couple more votes. 2, 1. Go ahead and close it, Cheryl. And share it with everyone. There we go. So we have Nova was our big winner. And it's good to see that. Descartes made a nice move. but Truist and UPS, not so much. Anyway, let's go back to our slides here, and we'll go on up. Do we have any questions? Jonathan and Kent, do we have any questions for our audience, from our audience? You can keep that next slide up, slide 101, with the photo of all
No
the
questions.
charming people. Oh,
No
the
questions.
presentations were so good that there were no questions whatsoever anywhere. So, but there's a picture of us from the 2 chapters as we got together at BINC last year. This one is virtual. In fact, I think just about everybody in that picture is either here presenting or they're helping out with this. So good for everyone there. There's a way to be able to reach us either in the DC chapter or in the Maryland chapter. And if you need more information about this webinar, there's a unique email address for digging into the BI that you can find us there. Again, if anyone wants to raise a hand now, we can take questions. And if we're not seeing anything, Jonathan or Kent, when you see that, go ahead and let us know. But let's go to our next slide, Cheryl. And again, if you want to be able to be on this list, and I assume since I see so many regulars here, you're on the DC chapter mailing list. You don't have to be in the DC chapter. We send out notices about educational events, our book club, this stuff. So we're not bombarding you, but we are trying to be able to sit there and let you know some of the educational things. And you don't have to be in our chapter. We're glad to have you. Let's go to our next slide. And Kent,
Hi,
why don't
and
you tell
if
us?
you okay, and if you would like to have your picture as part of this presentation, then you can volunteer with either the Maryland or the DC regional chapters. This is a great way to learn a whole lot more about investing and how you might apply the knowledge to help yourself and help others. And so it's a great way to learn whilst you are earning. Another benefit of this is that you do get some discounted rates when you attend BINC and as well when using the tools for better investing. All right, next slide, please.
So here's what's coming up next month. We're going to stay in this magazine because it's a June, July one. Normally we meet the first Monday of the month, but that's not going to work because it's around 4th of July. So we're going to be meeting on the second Monday of the month. And there are the stocks we're looking at. We're going to be doing Charles Schwab and Match from the Stock to Study an Undervalued feature. And then we're going to have Service First and Darling Ingredients. So come back and join us as we dig into the BI on Monday, July 12th. Glad to have you. Share this with your friends. It will be up on our YouTube video, hopefully later on tonight or maybe tomorrow. And let's go to our next slide. And what I've been doing is I've been putting stuff up on a manifest investing dashboard, and I've broken out the dashboards by different years and by stuff that's been winning and stuff. They're all public and free, so you can take a look at it. You don't have to be a manifest investor subscriber to be able to take a look at it, but you can see all the different ways that we've sort of crossed this. And I tell you, it's really interesting. The stocks that have performed the best out of all of them are not the stock to studies or the ones that people bring themselves that aren't one of the featured stocks, but it's the undervalued features have consistently done the best out of all three. And so it always sort of reminded me to maybe go back and look at those undervalued features and see what the experts are looking at to take a look at it. So let's go to one more slide, and I think I give you hyperlinks to everything there. I've just updated it. So again, if you have this handout, you can click on any of those links and it'll take you right to where they are, and you can get up to the minute changes on it. Going back to you, Jonathan or Kent, do we have any hands raised, any questions from anyone in the audience?
Yeah, we just had one question, but I got it taken care of, so we're good.
Okay, did I see a
Oh,
hand go up?
I just saw
I just saw
a
a hand
raised.
go up. Maybe they were just testing their hand. Come on back. We'd love to have you raise your hand and be with that. Okay. All right. I think we got one final slide. And if we go to, I think it's slide, here we are. So again, there's a hyperlink to our YouTube channel. Thanks for visiting. We'll keep this open a little bit longer, but we're done. Come back and see us next month. Share this with your club members. Share it with prospective members. Share it with someone to be able to show them the benefit of long-term investing. And come back next month when we dig into the BI. Thank you.
Yeah.
Good night, all.
Lee has his hand up, so I'm going to unmute Lee. And if you want to talk,
I
Lee.
just wanted to let you know the second Monday's the 10th of July.
10th of July. All right, I got it wrong. I you know what? You can't throw anything away on a well-groomed man like you. I got the date wrong. Sorry about that, folks. Anyway, anything else?
Just want to remind everybody to, before we sign off, try to download the handouts. It's in your menu. The PDF of the slide deck and each of the individual SSGs are located in those handouts.
Very, very good. Okay.
All right.
Well,
I think everybody did an excellent job tonight,
yes, it did.
as usual.
I spy Andrew. I see you there in the audience. I hope you're doing well, sir. Okay. We're not getting anything. It looks like people are just leaving. We might as well close up shop. And again, thank you very much, everyone.
Good night.
Well done. Thanks for the help, Sherilyn.
Good night.
Good night, everybody.
But
Good
Good
night.
night.
Good night, Jim Bob.
Good night, John Boy.
You have to be of a certain age to do that.
I am.
We all are, sadly. Except for Brian. Brian's ageless.